Welcome to the Drax Files Radio Hour with Joe Yardley. My name is Drexter Dupre. Joe is again not in today because obviously she's celebrating the 7th anniversary of 1920s Berlin in Second Life, and that is a significant birthday. Happy birthday, 1920s Berlin. I know some think this podcast is sort of a 60-minute plus minus infomercial for 1920s Berlin, and you are... No, you are correct. Anyway, good job, Joe, running this community and showing people that that a virtual community can be very vibrant and fun. But I digress because today, the title of the show, Money, 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 we are going to be talking about virtual currency. And I have to say that I have met my match in terms of going on and on and on. But with the difference that the person that we're going to have on, he does elaborate on things and he talks a lot, but he has a lot of insight in what he says, contrary to, as some have alleged, I don't have that type of insight, although I talk a lot. So I'll keep this short because as listeners to this program and observers of the Second Life virtual economy know, as reported by Inara Pay, there were fluctuations on the Lindex. And our guest, and I haven't even mentioned his name, Christopher Colosi, formerly Colossus Linden at Linden Lab, running the Lindex and various functions he had in the financial sector of Linden Lab. He came in originally when Linden Lab purchased Windlight, the Windlight team that he co-developed with his friends. And I think it's adequate to call him the Ben Bernanke of the virtual realm. At the time, the Federal Reserve in the United States is sort of the central banking system for our international listeners. And, given that Second Life is a country, Chris had that job and he has a lot of insights. But now I'm digressing again, kind of like trying to beat Chris in who can talk more. But this show is so full of information, tremendous insight into what is happening right now. And those fluctuations, they result, of course, in losses, buying into Linden dollars and trying to sell Linden dollars. There were millions of Linden dollars sitting on the exchange, not being bought. These fluctuations have sort of subsided. They have been going on for a while. And there are theories put forth. People need to cash out because they need cash for the grandfathered SIMs. Also, that Linden Lab with kind of secret agents is trying to get money out. And we have a listener on the blog who says, yeah, it's pretty clear that Linden Lab's cash flow is bad, so they need to cash out and they need to make a couple million. We hope certainly that Linden Lab will maybe give an official explanation to calm fears that the sky is falling. But let's listen to Chris Colosi giving us some insight into the whole system of the Linden dollar. And because Chris is also running his own company, Globit, where he is offering a global payment system for digital worlds, possibly spreading into the real world with physical goods. That's down the line, but it's certainly in his mind. Globits is being tested on the OpenSIM grid very successfully, and Chris is talking to other players in the emerging VR social VR field. So this is super interesting where the train is headed. My naive questions stem from not understanding anything, and I think sometimes that's a good thing when you have a very competent guest, because then everybody is served. But here's Chris, finally. I'm going to shut up. Here's Chris explaining in a nutshell what the Linden dollar is, what the Lindex is, how that system works.
I liken the Linden dollar and the Lindex to any real world currency. It's easiest to map it to other things we understand. So, you want to go buy something in China, we think of using our credit card, and maybe paying in USD, but what really is happening behind the scenes, especially for large commercial purchases, is that someone is, say, selling US dollars to buy in the local currency, and that's because someone in China can't do much with US dollars. To act within that economic system, within that world, within China, you need the local currency. Second Life is a virtual world, but it's in a lot of ways much like a country in the real world with its own currency. So the Lindex is the entrance and exit to act in that economy. I focused primarily on people buying in with US dollars, but from around the globe, there were third-party currency exchanges when I was in charge. People would sell their own currency to buy in. They are selling to someone looking to get out. So there is a two-way street there, and that is where the market can set the value. And that is where in different countries or on different exchanges, the value of the Linden dollar can vary. Because you might have more business people making Linden dollars and looking to sell them in the US. Your price to buy a Linden dollar might be lower. Because you have more people selling. You have more competition on that side. That's going to drive the price down. They're competing with each other. In another country, you might have more consumers. That might drive the price up. And then you might have currency traders who might spot that when that disparity gets above a certain amount, they spot an arbitrage opportunity where they say, I can make more money on the difference between these two exchanges than it will cost me to cycle money in the real world between the two, to move money between the two countries. So then that is where currency traders provide real value, which is to rebalance those differences. When they're doing that, that's a benefit.
Linden Lab also makes money through fees. That's part of the business model, which isn't there an issue then that, people can drive up the price and just make bank by day trading? There
is, and that is a concern. That was part of what my job was, to look for those things and understand how to control that. So when I joke about, I didn't have the title, but about being the Federal Reserve Chair, equivalently of Second Life or the Linden dollar, I was running reports, looking at data, and taking notice when I saw the currency value move and I didn't understand why it was going on. It might take a week. I might dig into data, map it a bunch of ways, and look for what is the pattern. Is this okay? Is this not okay? Is this something we're doing? Is it something that partners are doing? To give you a couple of numbers and then some examples on that, on the size, and is the Linden dollar the premier virtual currency? When I was there, I can't speak to right now, we had between $500 million and $1 billion per year in user-to-user transactions in the world. Okay, that's larger than a lot of small island nations, some small countries. I recall it's around 190th maybe on the GDP of nations list if you look at Wikipedia. Okay, it's substantial. About $100 to $150 million a year went through our exchange. I can't speak for third-party exchanges. That was Linden Labs, Lindex exchange, US dollar to the Linden dollar. And I think, if I recall, around $2 million a month was likely currency traders. So we had a little over $10 million a month, about 20% of that, maybe 15 to 20%. Were traders that were trading back and forth. Now, that probably varied at times. When I left, the margins were very small on the Lindex for making money. There were people who did it. Some people traded just on the Lindex back and forth. Some people traded between multiple exchanges. But my guess is at one time you could make a lot more money, and I bet the volume of trading was higher if you go back to 2008, maybe 2009. In 2011, that's about what it was, 2010, 11.
So New World Notes has reported based on, I hesitate to say report because I got to put that in. Hamlet and I, we're not the best of friends. So he probably saw it somewhere and then cut and pasted and added 2 sentences. Sorry, Hamlet, I need to kind of steer the pot. This is middle school, I know. But so what's happening is that there are fluctuations that are higher than usual. And so that means that when you are a content creator and you have a lot of Linden dollars stocked up in SL and you want to cash out at a good price, those fluctuations can mean a lot of money that you make extra or that you lose.
I only looked at one snapshot. It looks to me like things had moved from around 250 or 251 up to 265. Now, I don't know if they're still moving. I don't know if that's a steady trend in one direction. I'm not following the Lindex daily, by the way. So to really do that type of job, you need to understand months of history and you need to see what's going on. So I'm kind of pulling in knowledge I have from running this 4 or 5 years ago and a snapshot of data right now. assuming that moves slowly in that direction, that's about 15 Linden dollars. You're talking about 15 out of 250, 15 out of 300 would be 5%, right? So you're talking close to a 5% move. So you're talking about if you're selling $100 worth of Linden dollars, whereas maybe 2 weeks ago you would have gotten $100. This week you might only get 95. Now, if your margins are 50%, that might be fine. If you're doing a low margin product where you're only making 5 or 10%, that might mean that you actually lost money in the time it took to get your Linden dollars out, or it might mean that you cut your margin in half.
And we also need to mention, for the folks who don't follow this, that it takes time until this stuff is processed.
Yeah.
So when you put the order in, between that time, what you calculate, I'm going to get $1,000 out, and the time you actually get it, that might result in quite a bit of a loss.
And so there's time value of money. People have bills to pay. So on a stable exchange, people know about how long it's going to take. They set their rate. When you're seeing this, you might be looking and you might say, if I don't have major bills to pay, maybe we'll burn through this. So I'll keep my sales at 250 and it'll just take an extra 2 weeks, an extra month. If you need to get your money out, what you might do is you might jump the list and you might say, geez, I'm afraid this is going to get worse. That's when you have a run on the bank scenario. So one person jumps the list and places a Linden dollar, worse, either lower value, more Lindens they're selling per dollar. Someone else says, oh my goodness, I got jumped. I'm not at the going rate. They jump up one, they jump up another one. And we saw this once before, by the way, maybe multiple times. But while I was at Linden, before I took over the exchange, we had a run on the bank. So Linden Lab does print Linden dollars. I'll get back into that in a second.
Yeah, because if the exchange if it's so out of whack and people want to buy and there's not enough to buy, then I guess Linden has to print. But I don't want to.
Yeah, so when the economy is growing, that makes sense. When you have more people, think about it like this. When you walk around the city in your country, whatever country your listeners are from, how much money do you feel comfortable having in your wallet? In the U.S., let's say it's $60 right now. So for U.S. users, the U.S. government needs to have enough currency that banks have what they feel comfortable with and people can get $60 in their wallet. If people start going to the banks because they've only got $5 and the banks start telling them we don't have any more cash, people get worried and they start hoarding, they start doing things that are bad. So the government prints more, a bunch more kids are born, a bunch more people act, a bunch more trade happens. There are a handful of reasons why people might need more currency.
And then we have inflation, right?
You can. If you print at about the equivalent of how your economy grows, that being the people or the GDP, then you ideally don't have a lot of inflation. But if you print too quickly, then you do. You end up with too much money. So that is what we did back in, 2009 or 10. And actually, all it took, even though those huge numbers that I mentioned to you, I'm giving you an idea of how you need to balance economies. I believe we had a charity that had raised money over the course of maybe 3 months, and I feel like it might have been something that happened in Japan, some natural disaster, and it was in the tens of thousands of dollars, maybe 60 grand that they had raised. We, over the course of 3 months, continued to print as many Linden dollars as we normally sell.
Because people wanted to donate to this charity.
Yeah, and we saw the market, the value of the Linden dollar growing, appreciating. We saw deflation. And so the person running the Lindex talked to folks and said, I don't know why this is happening. And they said, hey, rather than let the Linden dollar depreciate, let's print some more money. Let's keep it stable. And let's make more profit. What they didn't look at is why that was happening. So if that had been happening because the economy was growing, because we had more users, that's the right move. But it was happening because this one charity was accruing Linden dollars that normally would have been sold, but that people were donating instead or buying in to donate, increasing buying demand. Well, what happened? They accrue what they want to donate, and then all of a sudden, all at once, they dump $60,000 worth of Linden dollars on the exchange. And we normally printed 10 to 20,000 a month, so we cut that to zero. Guess what? There's still $40,000 of additional supply on the exchange. And so what we saw were a bunch of merchants go, oh my God, it's going to take me 3-4 extra weeks to get my money out. I need to pay my bills. And they all started jumping the line. So what was wrong there? We didn't understand why it was depreciating. A quick analysis of your economy would have shown you that you had one account that was suddenly, that you had never seen accrue Linden dollars, that suddenly had millions upon millions of Linden dollars in. you would have reached out to that person as a major player who has the potential to do damage to your economy, and you say, what are you doing? What's going on? You might also put limits in place. They're an account that's never traded. As much as they're a charity and it's great, you don't want them to dump $60,000 worth at once on the exchange. So you can put limits on your exchange, but you can reach out and find out what they're doing. You find out what they're doing, and in a few months they're going to dump. You might entice them and say, hey, why don't you work with us and start selling those now, start accruing US dollar profits so that our exchange, balances, or you might let the Linden dollar depreciate, knowing that in 3 months when they sell, it's going to appreciate.
And as we talk about money, my wife is texting me that we got a tax refund. Woohoo! I'm going to buy some Linden dollars. No, but basically then the issue is if that charity says, okay, this is it. This is the end of our fundraiser. Now we are, what you meant by dumping this on the Lindex is that they essentially want US dollars now, so they dump this stuff, and then there is just too much Linden dollars there.
Yeah, and let me explain. It's a little bit of detail, but people should understand because they hear that there's a rate and what sets that. The way an exchange works is 2 types. There's actually 4 blocks of sales. There's 2 parameters, and they're both binary. There is a limit order and a market order. A limit order means you want to set your value, either what rate you're buying or selling at, but you don't get to choose when that transacts. It might be never if you try to set too aggressive a value. A market order means that you want your money right now. When you go through your normal consumer interface and you just say, hey, Linden Lab, I want to buy 4,000 Linden dollars, what they're doing is placing a market order that trades with a limit order on the opposite sell. So then there's buy and sell. So when you place a market buy, which is what most consumers do, that trades against the best rate limit sell order. Okay, so what most business people are doing, if you need your money out right away, you place a market sale. And there are some people that are placing limit buys. Those are primarily currency traders or businesses that need money. Usually most consumers, only really knowledgeable consumers are placing limit buys, in my experience. Okay, so there's less what's a word for it? There's less volume built up there. What we're seeing right now when they say that the rate is moving is there's still the same amount of people placing market sales and market buys, but you have business owners looking to get their money out of the system, and they're changing the rate at which they're placing limit sell orders. They are willing to accept less and less money on the limit side to get their money out sooner. It's important to know there's kind of 4 blocks: market limit, and buy and sell. It's not just a single buy or sell order. We simplify it down to what are people trading at, and that's kind of the average, rate for the day or the midpoint in between the limit buy and the limit sell. And when I was at Linden, I recall there being about a 10 or 11 Linden dollar gap. I think our fees were around 9 Linden dollars. So it gives you an idea that when I was there, currency traders were only making about 2 Linden dollars per dollar, let's say, which is less than a penny per dollar, less than 1%. And the gap right now is more like 20 some odd Linden dollars. So that also says that people are skittish enough that currency traders aren't jumping in to take advantage of a 20 Linden dollar gap. So it's not just where it's moved, but the gap between the limit buy and the limit sell says to me that people are skittish. They believe the market's going to continue to get worse. Because if you had confidence it was going to bounce back, you could make a lot of money placing buy orders right now. The way we balanced the economy back when we had the run on the bank due to that natural disaster was we talked to a bunch of major players and we convinced them that we would stabilize the economy if we had to step in, that we would not let it get much worse, and that they could make money. And we actually convinced players in the economy, so that Linden Lab didn't have to do it, to step in and place buys. They placed enough buy orders that people regained confidence, because the value of your currency is just a reflection of the confidence people have in the value of your currency. There's a great Planet Money episode, Planet Money podcast, if people don't listen to it. If there's any way you can understand how digital currencies are basically the same as real currencies and where the value comes from, that it is kind of a circular logic game, I implore everyone to listen to that. I think it's one of the best put together podcasts I've ever listened to. And so similar to what Brazil did, you could say we did different mechanisms where we convinced people it was stable. Back years ago in the U.S. when they declared a bank holiday. That was about halting the movement, reinstilling confidence in the people of the society. So Lyndon might step in to do that. We did that before. But right now, I would say it's not there. If that had already happened, you'd start to see the buy orders creeping back toward that 10-11 Linden dollar gap. Assuming, by the way, Linden hasn't changed their fees. When I was in there, we assessed how much we should print. And prior to me joining, actually, the previous person who ran the Lindex started to put a bunch of formulas together to help determine what you should print based on other economic factors and allow the Lindex to move a bit. It's a tricky game. Not everyone agrees with the Federal Reserve Bank of the U.S. When they make decisions to print more currency. Right now, I don't know if they print a lot or not. If they do, I would be arguing that maybe they should print less.
Well, that's why when people criticize in hindsight, Alan Greenspan as being sort of dismantled by a lot of different people with his strategy back then.
I'll give you something else that will give you an idea of things that you need to look for. And one of the things that Lyndon, should be concerned with, why one of the theories that New World Notes puts forward,
That's what I want to get to. That's what I want to get to. So there's a couple theories that people need cash to get into the grandfather Sims program, where they have to pay $600 up front to pay to lock down into a lower tier fee. That to me sounded not plausible in the right away, because people at that part of the game, you can't tell me that they don't have that cash lying around. I mean, that would be kind of ridiculous not to have any type of cash reserve to get into if Linden Lab offers something like that. That they would stretch themselves so thin to have absolutely nothing.
I will argue that there is a problem with this program. And the biggest problem that people should look at is, if you believe in your currency and you have faith in it, you should accept payment in it. And I struggled a lot when I was at Second Life to convince our executive team that if we accepted payment in Linden dollars, that becomes real dollars when we sell it. And I would get people saying, but we need to make US dollars. And I would say, yes, and in 2 weeks we will have that, and we should take part in our economy. And there were some CEOs that got it and some that didn't. When you put out a program that says, we will let people buy into a grandfather tier program for $600 USD, do you let them pay in Linden dollars, or do you force them to pay you in US dollars? And I am assuming that, just like when I was there, that if you want that program, you need to get them money in US dollars, either from your account balance from selling Linden dollars or from charging a credit card. And in my opinion, you want to keep a stable exchange, and you want to show people that you believe in the economy and you're just as much a player in this space, that you would actually charge a fee to do it in US dollars.
So the analogy would be in the real world, when you go to Mexico and you kind of want to buy something, and they go, no, we only take US dollars here.
I want you to think about this for a minute. I live in San Francisco. Property values are a lot. Let's assume for a minute that the city or the federal government accrued a bunch of blocks of property. And they're like, we're going to sell all of this property. Oh my God, this is worth billions of dollars. But we're going to sell it in Chinese yen. So if you want to buy this land, you need to go buy Chinese yen on the exchange, or whatever Japanese Indian renminbi, whatever it is, British pounds.
It's Japanese yen and I don't know even how to pronounce the Chinese currency.
It's Japanese yen. Yeah, that's why I said Japanese. I'm like, wait a minute, it's not yen in China. Chinese what?
Yuan.
Okay, yes, there we go. Thank you.
Yeah.
In my opinion, the brightest decision and the best thing, and what could have avoided the risk that this could have caused anything, would be to say, pay us in Linden dollars. Imagine the U.S. government saying, pay us in Chinese yuan, to buy this property, and then you add U.S. citizens selling U.S. dollars to buy a foreign currency to then give back to the U.S. government. People would be angry, and if it was enough property, it would impact the exchange rates, because and it's just bad for the government. So, in my opinion, whenever Linden Lab says, hey, we're going to do this and we want you to pay you in US dollars, I realize it's a little different. They're not quite a country, but I think it's a bad policy decision. I know I'm playing backseat quarterback. I'm not at the company. I apologize to anyone there who says, hey, you don't know the details of why we have to do this. I doubt that Linden Lab needs an influx of capital. When I was there, we had pretty good revenue that came in. Since I left, I know the staff slimmed down. It seems like the product has stayed the same. So I doubt that Second Life or Linden Lab is in any risk of collapse or needs an influx of U.S. dollars to pay any bills.
So because we took that detour, and it's not a detour, it was very important that your points on the grandfather sin, because it related. But now, as we're heading back to these theories, so number one, you said, okay, so this is kind of a baloney conspiracy theory that Linden Lab needs cash.
I'm not looking at their books. Maybe someone else can assess if they've made major investments or if things have changed. My understanding is that the economy and the in-world, the amount of land, which is where they make a lot of their money, has stayed pretty stable over the last few years. The staff shrunk since I was there. So my gut would say they've been putting money in the bank, but I don't have access to that. I do think there, and we'll get back to this more in the theories. I do think that might cause people concern that it's going to shut down, and that can impact exchange rates. We'll get to that in a minute.
Well, a lot of people might say that Project Sansar is a huge investment. I can hear people say that, and there's a considerable race to sort of the dominance in the field of sort of user-created VR worlds, and maybe they're investing a little bit too much, but they don't
possible.
have.
I think the fear, to my point of the value of your currency is based on the confidence people have in it. The fact that people believe that could be the case can impact your currency value. So whether or not it is the case, the fact that people believe that Linden might be short on money, which therefore can impact the confidence they have that Second Life would be around in a year, that could cause some people to jump on and want to dump their Linden dollars quickly. So that type of lack of confidence can actually cause the problem, which then instills more lack of confidence because you get that snowball effect.
But here's the thing, though, because the sky has been falling since 2006. So that debunks that theory, because people are always nervous that Second Life closes down next month.
Let me speak towards on the New World. I do think, because I think a lot of people believe the theory that a bunch of major businesses, landowners, are selling currency and that they're the ones driving this. I doubt it. My bet is that they're the people. If you look at the charts, there's a bunch of volume at 250 and 251 that has stayed there. My gut tells me those are your major landowners. Part of the reason is when I was there, I talk about studying things. In my experience, they try to drive appreciation in the Linden dollar. They try to drive deflation, not inflation, because they know in the long run they make more money. They charge all their fees in Linden dollars, not U.S. dollars, and then the Linden dollar equivalent. So when the Linden dollar becomes more valuable, their prices don't change for what they charge. They make the same amount of Linden dollars and they cash them out. So when I was there, there had been a period where we had seen things, the Linden dollar appreciating in value, and I looked back and I finally spotted the pattern that over like 6 months, every month it was our major landowners driving the rate up a Linden dollar at a time, about every month, and it took effort to do that. I can't say that they were working together to do that, but there was enough info that they could spot each other acting and they could act in concert. And the problem there is that we would have hit a point where it would have sprung back all at once.
This goes over my head a little bit. Now, how do they do that?
This is where it gets complex and where you need to be aware of like what every part of your company is doing. We had a sales staff at the time who was offering them better payment terms. Hey, you do $300K a month in business. It's, in my opinion, classically what's bad with economy is your big players get the discounts and then get better rates than your small players. So how do your small players ever grow to compete with your big players? Do you diversify your economy or not? So I'm hesitant to ever give your big players benefits you don't give to the small ones. Well, we were doing that. Well, what did I find out? I see this moving, and then I go, how is this landowner keeping $300,000 worth of sales on the exchange for, they wanted to jump the rate, so it took them 6 weeks to sell. What were they paying us with? Do they have that much in capital? Well, I start digging in and I start finding out who charges them, and I start finding out that we're suddenly letting them go 1 month, 2 months behind. and paying us and giving them 6 weeks of leeway, a month of leeway. Well, they're telling us they can't pay and asking us for this. We have a salesperson who wants to keep them happy, so they're letting them wait. And what that salesperson doesn't know is that they're essentially taking advantage of us getting a free 6-week, 2-month loan. They're using that loan effectively to be able to wait on the Lindex longer. So if they didn't have that time, they would need to place at the market rate. But since they convinced us to give them that time, they're basically getting Linden Lab to pay the bill, to pay the cost of them moving the Lindex. Now, if only one of them did it, they'd still end up running out of time, and they need to bump their sales up and they need to sell. But what you had was 5, 6 major landowners doing that, and in concert effectively with the Linden Lab sales team at the time, and moving the market. And that wasn't the market moving, that was 6 major businesses pushing the market in a direction. And that is bad. Those are the things when you are a Federal Reserve chair you need to watch out for. I spotted this, I charted it, I sat down in a meeting, I showed people here are color-coded, these 6 people. Everyone else on the exchange is a gray. I want you to watch the pattern day by day. Every month, this landowner moves. A day after they move, this landowner moves to the next rate. A day later, these 3 move, then this one, and then the next week we chew through another $1 Linden rate point on the exchange, and we start trading into there. And next month they move it in the same pattern and in the same pattern. And what you see is them doing that before you see them doing it before there was enough demand moved or chewed through that they would ever trade at that rate. It was with knowledge that other people would move with them in the market. And what's the risk there? The risk is that things bounce back, or the risk is that Linden Lab overprints currency to compensate because they want to keep the exchange stable, and then eventually we have a run on the bank, we have too much currency. So anyway, back to New World Notes opinion. Those people tend to be very aware of what a $1 Linden move makes, because they are trading in the hundreds of thousands of dollars a month, at least when I was there. That is not a direction they would push the market in. They generally can get terms from Linden Lab to hold out. I think they make pretty good profits, so I would think they would have money in USD to purchase their grandfathered land. I could be wrong. There are a lot of reasons why I doubt they're doing it. I think small business owners could be selling to pay for the grandfathered tier. I think they could be leapfrogging each other. I think just the announcement of the grandfathered tier could cause that behavior. And Linden Lab could be, I don't know how much they print in Linden dollars. So Linden Lab could have caused just an increase short-term in sales with this program and not reduced what they're selling in to grow the money supply.
But if the landowners feel that that the sky is falling and they are pulling out, I think
you'll see the pile of 70 something or 150 something Linden dollars for sale around 250 or 251 move. I would be worried about another run on the bank scenario when you see those piles of money decrease and start to get placed at the market rate. That, to me, my gut looking at it is that those are your large business owners, and they're thinking this is short term, and we'll make our money eventually. So like I said, I don't know how much trades on the exchange now. So when I see all this stuff up to 265, but it's 1 million Linden dollars, 2 million, I don't know how much is being placed every day. I don't know how much is being sold. Those landowners, I can guarantee, know how much gets placed a day in Linden dollars, how much gets chewed through. They know how much that will move. They know looking at those volumes, whether tomorrow the rate will be 260, we'll move from 265 to 266 to 267, or whether they'll chew through the volume at 265, 264, and 263, and they'll be at 262. They can look at that volume, and they can tell you whether it's 1 week or 3 weeks to get back to 250 if nothing else changes. I guarantee you they know that. They follow that exchange daily. Someone at Linden Lab hopefully knows that as well. That was part of my role while I was there, was to be that knowledgeable that I could look at that. When I was there at Linden, I could have looked at that table and I could have told you how many days it'll take to get back to 250. And your major landowners know that. So I doubt it's them. Given just what I know about the way they've acted in the past when I've been in charge of the exchange, given how much, someone else loses a couple $100. They're losing, hundreds, thousands, maybe tens of thousands of dollars when you see a 5%. If they're trading $300,000, 5%, you're talking $15,000 that they lose if they jump to 265. I don't see them doing that unless they absolutely have to. I do think small businesses, where it's only a couple of bucks here or there, are jumping the line. It could be Linden selling. It's hard to know without the internal knowledge.
As we're taping this interview, is that the situation has in fact stabilized. So we'll see. A last word, and then we'll go to Globit. Prokofy Neva is, of course, saying that the Lindens are doing this. Is she saying that? But there's also an article that, if you have a lot of time, you can read that, and then you can go back to listening to Alex Jones.
No, listen, Linden Lab is capable of doing it. They can produce and print and sell, mint essentially, as many Linden dollars as they want.
But I think she's saying this, that they're doing it. Lindens are doing it sort of undercover with like secret accounts or something.
I doubt that. When I was there, I mean, unless a lot has changed, we sold from one account. One person was in charge of that. Ideally it should be a team, but it was tracked. It was a pretty manual process. Could they do it? I just don't know what. I don't know what the incentive would be. If Linden wanted to do it, I don't see a reason to do it from private accounts. If Linden thought the rate should be different, sure, they can print enough Linden dollars and put on sales and move the rate. But guess what? You're going to have a bunch of businesses that might struggle to pay their bills. It's likely detrimental. If Linden is doing it, I think it's much more likely that it's accidental, that they are not keeping a close eye on understanding what's happening, and that they created a program which caused an increase in selling demand, and that they did not account for that in deciding how many of their own Linden dollars to place for sale in a month, or that they didn't account for it and they've cut their own Linden dollar sales and that wasn't enough. And that gets to why you should charge your fees in your currency. So what is the biggest reason that if we're successful with Globit, we are going to be guaranteed a more stable currency than Linden? Because we do our best to charge as many fees as we can take in Globits. We will take in Globits. Our fee is on an in-world transaction, and it's in Globits. It's not in USD.
Now we're talking Globits. This is your currency. Let's talk about Globits. Quick summary. I'm also going to link to the previous episode that we did. What is Globits? Also, as opposed to the Linden dollars, who controls it, and where are you at, and why is it better?
Summary I can give is what PayPal did for eBay, Globit will do for VR and the virtual world. And I know a lot of people have negative opinions of PayPal, but people do use it. They just don't love them as a company, I think. But, you have a lot of separate sellers. You don't have trust in the space. Do you give someone your credit card? How do you buy from different sellers without hassle? Well, the virtual world is much like that. We have all these different worlds. We have all these different products. Look at OpenSim. We've got a bunch of worlds run by different people. In VR, you've got a bunch of different platforms. And people want to be able to bounce between them and spend money. And frankly, that's not easy to do with modern payment mechanisms. So what PayPal did for eBay was create a trusted, safe system that you could use with everyone, that as a consumer meant one account. As a merchant meant one payment mechanism. But as the consumer, you could fund that with whatever you needed to. The major mechanisms know it was safe, know it was stable. And then PayPal grew to be much larger than eBay. At Globit, we see ourselves as playing that same role in virtual reality, in virtual worlds. What we have is a digital currency, much like the Linden dollar. We are not like the Bitcoin. We control the money supply. All of what we just talked about, I hope, gives your audience trust in the fact that I have some good ideas on how to keep an economy stable, and also why you do need that control. There are times where you need to choose to print or not print money. It is not something where a mining algorithm like what Bitcoin has.
I was just going to say, is that in fact an issue that Bitcoin has?
That's exactly why Bitcoin is incredibly volatile. How do you use Bitcoin as a merchant when the price has fluctuated 50% in a single day, in hours in the past, where it crashes and falls? There's a whole host of reasons that happens, but one of them is the fact that they cannot add currency when there's increased demand, and they can't decrease the money supply when there is decreased demand. So you get these crazy peaks and valleys. We have formulas for what we're doing, but maybe the biggest thing I can say that is different from Linden Dollar, from the Linden Dollar, is that we charge fees in Globits. So we do print and sell some Globits to increase the money supply as the number of users grows, as the number of products we're in grows, as we find that more people need more money in their wallets. For stability. And that doesn't mean the rate won't shift. Right now it won't because it's pegged. We're early on. We're enforcing stability, but eventually we will have an exchange like the index where things move. And at that point, how we grow the money supply will matter. But on top of that, most of what we sell on the exchange, unlike Linden, isn't going to be growth in the money supply. It is going to be fees that people paid us that we are just reintroducing that are still in the money supply that they paid us in fees. What that means is that we have a pool of money that if our economy ever shrinks, let's say by 5%, we may have 5% set aside in fees that we can say, we're going to shrink the money supply. We don't have to buy back Globits. We can just not reintroduce these and we can keep it stable. Linden Lab can't do that. They don't charge many fees in Linden dollars. So when the economy shrinks at Second Life, or when they find they've overproduced, like when you have a charity and a natural disaster, they can reduce their growth to zero. But if that's not enough, they don't have any other mechanism unless they jump on and buy Linden dollars. And they set a policy years ago that they try to stick to, that they won't buy Linden dollars. There's a lot of reasons to do that. I think it's a good policy. We're trying to follow it.
Isn't there any compliancy issues too? I mean, can they? Is that even
exactly.
allowed?
So they have run out of kind of elasticity to shrink the economy on their own, and they just need to let things play out. We actually will have a mechanism to shrink that, which is a pool of Globits, a much larger pool that we sell because our users aren't paying us in US dollars. They're paying us in Globits. So that is the biggest reason. You know, if you look at what's going on right now with the Linden dollar moving and fluctuating and depreciating, if we looked at that and we felt that that was bad activity and shouldn't be happening, some of those sales would be ours, a bunch of them, not of growth of the money supply, but of sustaining it. And we would say we should shrink the money supply. Guess what? This is happening because a platform dropped off our system, and that's 100,000 economic users that just disappeared, that shrunk from our citizenry, our population. We don't need as much money. We need to foot the bill on that. We need to foot the cost for the stability of the system, for the long-term benefit of the system. And that means, it actually doesn't mean we don't make some money. It means that we made some money months earlier that we really shouldn't have. But we will have a mechanism to remove that without buying Globits.
Interjecting real quick, what I now see as you're explaining this to me is actually quite a bit of an operation because we're talking about not one world, we're talking about, we don't know how many worlds are going to come on.
We want to be the commerce backbone, the currency backbone, the Visa or Amex kind of pipeline.
Right, and I know you are a very capable guy, but this sounds so entirely complex to me, especially what you just explained, that you got to keep an eye on that stuff. And that's what I was going to ask. The whole logistical thing, is this automated to some extent? I mean, are you hiring on TaskRabbit millions of people who watch that thing? I mean, how is this going to work?
A couple of things. One is, yes, things are complex, but every complex product starts small. Even the Lindex started with, I think, a couple of guys building a Lindex. Linden Lab didn't have even, frankly, the idea to build a currency exchange. If anyone knows the term GOM, that came about because Linden Lab put them out of business. They were called Gaming Open Market. The couple of guys, Linden Lab offered to acquire them. So you got a couple of guys who built the equivalent of the Lindex in a weekend. It took off. Now, would that have been long-term? Maybe not. But you use the Lindex and you think about how complex that economy is and how much money it moves. And that started with two guys probably in their basement writing Gaming Open Market. Okay. You are right, though. To support a bunch of virtual worlds, we're going after OpenSim right now. And that has been, it's not an easy platform to integrate with. It's open source, but it's a lot of, a lot of code that's been around. It's Everyone runs it different ways. We went after it to show, I think most people understand that OpenSim is an incredibly complex code base, incredibly diverse, different people running it. So what we wanted to show is if we can build a plugin that is drop-in for OpenSim, we can build a plugin for anyone. You can't tell me that something else that, I'd love to hear it if there's someone else in the VR space that somehow is a more complex integration. And we had to do this on our own without working with, there's not a platform owner who's like, oh, we'll just change our code. We need to work into how the system worked, which was a bit of a copy with the best, knowledge they had of how Second Life worked and guessing at how things worked. So we have built the plugin for OpenSim. We've been beta testing for months.
This is a plugin to buy and sell, and so that it integrates with the virtual goods and services that are offered.
It is integrated. So to give you an idea, someone creates an account like us. I mentioned we're like a PayPal. We have an account system on the web. A user logs into wherever they are in OpenSim. On whatever grid. This works on the hypergrid. And that grid, if they have Globit enabled, they have an account with us as well. And they have a set of keys and signatures to let us know that it's them talking to us, okay, that they're a trusted party in our system, so we know who they are. And if a user wants to spend money on that grid, they basically have a one-click authorization. That grid presents them a link. We've done all this in our plugin. They get a link that says, hey, do you want to authorize Globit on this grid or on this region? You can have worlds that have different Globit systems on different sims. They click that, they get to our website with an authorization. So if they're already logged in, it goes right there. And on their account, directly from us, so it's completely secure, they go, boom, authorize. That gives that grid or that region permission to request their balance, which can be displayed in the viewer. So their balance is there. So suddenly their single account with us is available on whatever virtual world they want to spend on. And then we have tied into the actual commerce transactions in OpenSim. So you buy an object, you pay a user, the standard UI in the viewer runs through a money module add-in. So you have 1,000, you authorize, that grid pulls down your balance, shows you have 1,000 Globits, and you go, hey, I want to buy this thing for $250. You do the standard, buy an object, that submits a transaction through our money module that submits to us that says this user is authorized, who has authorized this grid, on this grid wants to buy X object from X user. And we transfer the funds. There's a little bit of work with identifying sellers. We can do it from an email if they're already in our system. The preferred thing is that they authorize a grid, and that gives them the ability to tie it to really put a back-end tie in our system between their merchant account, their merchant avatar, and a specific account in our system. They can deauthorize our grid after that if they don't want to risk that grid will charge them funds, and we'll still track whatever the last authorization link that they created was. But so behind the scenes, our system moves the funds from the Globit account of the buyer to the Globit account of the seller, sends a balance update, and does, within a transaction, does the transfer using, it's called a buy-sell module in OpenSim. We send the signal to that to say, hey, deliver this good. That is, the buy-sell module is standard OpenSim core. So the delivery of the product happens through your standard OpenSim. We take over just the financial transaction piece. But we have done a deep integration where we are tied into the actual OpenSim interfaces. This was not easy to do. And we'll have more work to do on it. We've gone through about 3 iterations in our beta. We've fixed all of the bugs I'm aware of that are definitely with our system. We definitely have more feature requests from people, but we have a core that we think will work. And what we're working on now, this is the first place I'll state it publicly, is we got awesome feedback. We had a couple of grids reach out to us and say, we know you're working on fraud prevention. We know you want to make sure things are perfect before you release to live payments, but we really want to start having real commerce, and we have decided we are using Globit. We love the system. Can you launch payments before you do cash outs? I have talked to our users on our grid. They have all agreed they would be happy to start using real money and paying, knowing that they can't cash out proceeds yet, but this at least means they can start accruing profits, they can start cycling money. And so we got that request from users. It was awesome feedback. I really appreciate those grids who reached out, talked internally and said, yeah, you know what, this makes sense. It's actually better for us to do it in stages as well. It means a better product. So we've spent the last couple of weeks working toward getting payments good to go. Hopeful that in the next week, 2 at most, that we'll be good to go, and we'll allow some of our beta test grids to move from our sandbox to our production environment. We won't have cash outs ready yet, but they'll be able to buy Globits using real, say, credit card charges. Those will be real Globits, not sandbox Globits, and they'll be able to start buying things. So within the next couple of weeks, we'll move there.
And so I guess you keep this in the back of your mind that the necessity will arise as this grows, that your stated goal is to, all the pitfalls, all these issues that you learned as the Fed chair of Second Life may come into play when it gets bigger. You take one step at a time at this point, because right now your priority doesn't have to be losing sleep over how
losing customers right now. I have beta testers that want to go live, and I don't want to have them have to wait 2 and 3 months. They want to start making money, and I want to give them those tools. So I don't lose, but I do lose sleep over chargebacks. So you look at payments, we're not doing cash outs. Well, that's safe. You can't get money out. Well, Linden Lab got hit with, I think, a $3 million fraud hit back in 2007 over the course of a weekend. Now, the benefit, I'm aware, and I have advisors who are intimately aware of how that happened and what to look for in payments. So before I just start taking credit card charges, I want some mechanisms in place to spot potential fraudulent behavior. And we've got a lot of that in place now. And so those are some of the things that, it doesn't mean we won't have fraud to deal with, but we don't want to come in Monday morning and find out there's been 3,000 charges. I can prevent the money from leaving the system, but that's still maybe $15 to $25 per chargeback fee. That's a lot of money. So what I want to do is, if someone starts to do that, I want to have an automated system that spots it, freezes those accounts. Next time that credit card is tried, doesn't attempt to charge again, puts a hold on it, says, hey, this is risky. And that's the balance. We might have some customers who go, hey, I just had my account frozen, or hey, I can't get this credit card to work, what's up? And we may have to manually look at some things. And what is challenging is that when you buy a pair of pants at a store, or you buy something on Amazon, they've got shipping time. They often have time to look at, to assess that. You charge at a restaurant. Are we going to pay that restaurant or not? Did you actually make this? You charge at a gas station. Like, the credit card doesn't disperse the money right away, but you get your product right away. With Globit, we have to make a decision within a few seconds as to whether we sell you those Globits or not. And if we don't, we're going to have some customers that are annoyed, and hopefully they understand that this is to keep the costs down. If we didn't do that, we need to be charging much higher rates to cover those fraud risks. As far as needing more staff, we're going to need more staff. Our goal is to release an OpenSIM, and we want to really enable that community, and we want to give them a product they have really been asking for and clamoring for years. But that's just the start. So, they've been incredibly helpful. The hosting providers, the grids that have helped us beta test, Hypergrid Business, Maria Karlov, incredibly helpful. She, from early on, has been connecting us with folks, has written about us. They've been incredibly helpful. And that's not just, hey, we're giving you things. I mean, we are aware we're leveraging this community to build a proof of concept as well. That doesn't mean we're going to abandon. We believe there's a thriving community here we want to support. But going in, if we want to tackle VR, if we want to build more plugins, if we want to work with VR chat and with high fidelity, and who knows, maybe someday with Linden Lab adopting our currency, we need more staff. We want to open up the exchange. We need more staff. So our goal will probably be to show that we can transact, that we have low fraud rates, that we have money moving through the system, that we're profitable, and then leverage that to raise funds. And there's a lot of money going into VR right now. So I believe we'll be able to do that. And we're going to use that to grow a team. We'll probably start at around 8 or 10, and we'll look to build revenue. But to go after VR, OpenSIM was hard enough as 2 people. We would have been able to do it in 6 months if I had 10 people.
Now, if you were to pitch this to me like I'm some VC or whatever, what if I say, who needs that? Why not just use US dollars? I think I asked you that last time too. I mean, come on. Why add another layer of complexity? Why don't you just have people put their credit cards and they do euros and dollars.
In my opinion, one of the biggest things from people in the space is how do you price your stuff now? Okay, so if you want to be paid, if you're a U.S. merchant and you want to be paid in U.S. dollars and someone's buying in euros, guess what happens on an international marketplace? Either you or that person pays a currency conversion fee. There goes 5 to 10%. Do you want to pay 5 to 10% on every transaction with every user? Okay, so you're going to accept euros now from European users. Okay, how many currencies are you going to accept? What are you going to price your product at? Now you need a bank account in every one of those countries, in every one of those currencies. Because if you don't, you need to accept US dollars. And if you're only accepting US dollars, then we charge the user 5 to 10% and do the conversion, or we charge you 5 to 10% and do the conversion to deposit US dollars into your account. So you're looking at exorbitant fees. Those are the fees we want to get rid of, that we believe in this global economy have no place. We don't believe, my experience with Linden, and I wouldn't have been able to do it without having that job there, was to realize that when you have currency exchanges operating in different countries around the world, you can keep that local country's currency just circulating in that country. And that means you might need to pay some fees, but you don't need to pay the exorbitant fees that are charged now to transact with the international community. Number 2. Microtransactions. So why don't we just charge a credit card, charge whatever? I think most people realize most things right now are sub $1. You have a 30-cent fee on a credit card. That's exorbitant. Why don't we charge in, just choose US dollars? Now, what's the buy-in fee for everyone else? It's still not getting rid of those. It's great for the US market, but it's bad, for everyone else. What currency does a specific product want to use? Is a country or a major marketplace in some other country going to adopt a product that uses US dollars? Is a Japanese company going to adopt a product for a marketplace that's primarily within their country? I mean, there's pride here as well. So we'd like to choose something that is not specific to a real world country. If it turns out that we get users and merchants that don't see those as benefits and want to trade in, US dollars or some other country's currency, we can look to do that. I see pricing, I see a lot of challenges with having to operate in every world currency, and I see challenges with having to choose one. So what I think is, if we get large enough, think about Second Life right now. Is there anyone who operates in Second Life that doesn't understand what the value of a Linden dollar is? The same way that they understand what a gallon of milk costs in US dollars, they can probably tell you what their land tier is in Linden dollars and what that equates to and what they need to earn. We listen to our users. If it turns out that's not the right move, we'll look to pivot. The same way when we started, we thought gaming would be the right market to introduce on, and for a lot of reasons that wasn't the right place. And I had been putting off OpenSim because there is a lot of fraud risk, because there are a lot of user-to-user transactions which are more challenging to enable than the user-to-game platform transactions you have in gaming. But it turned out that wasn't the right space, and our value prop was really in these marketplaces that have user-to-user transactions.
Yeah, or as Ebbe has said, the future of VR is user created. I couldn't agree more. I mean, this is the promise of what started with SL, and I think to empower user transactions and microtransaction, all that kind of stuff, is keeping that dream alive, not abandoning the goal of actually having a more diverse economy than just sort of big game companies selling sort of downstream.
Yeah. And I want to get to the point where, part of why we're doing this in economy of scale. Like I said, as a consumer, I want you to be able to jump around, and I don't want you to have to commit $20 to something before you know what the product is. I want you to have a balance, and then for that product, if you like something, I don't want the friction of, well, geez, another product I need to give my credit card to, blah, 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 am I going to spend? The stats are generally considered to be a 50% drop-off with every step in the payment mechanism. So if I can give you a one-click authorization, all of a sudden that user can buy. They also don't need to commit $20 to avoid that 30-cent credit card fee. They can just buy the first item and become an economic user. Anyone who's run a platform can tell you that is a huge hurdle to turn a user into an economic user. Beyond that, great, we're in VR right now. We're in OpenSim. Maybe we'll get into Linden. I want people who are making profits to not have the only avenue for using those to be selling on an exchange. I want to get to where other products and marketplaces that aren't virtual reality start using them. Imagine that you can pay your AWS tier in Globits. Imagine that you could buy. Maybe that's a payment mechanism. You can go on Amazon and you can buy that, rent a movie. You can buy that Office desk in Globits. Those are my view. Imagine you could travel to a foreign country and, it's an accepted form of payment. And now you've got a currency that you understand. Now, you're talking years and years, if not decades, to get there. But you can only get there if you have a single universal currency that grows en masse. You're never going to get that with a currency operated by one company. You're not going to get there with a currency that doesn't have the kind of web services and security infrastructure needed to handle multiple. So even when you look at the size of the Linden dollar, I don't know what's changed, but when I was there, we didn't have to worry about trust mechanisms because we assumed that every signal coming in was coming from a server we controlled and was fully secure and coming from a user who we knew who they were. So you want to enable systems, through other platforms and products. You need to take a step back to where you stop trusting things and you build a whole security model outside of just your transactional model. So we have built a security model using OAuth for authorization, OAuth 2.0. We have built the transactional model, expecting that our databases are not all in the same system. It is a distributed transaction system, that can scale at multiple points. Hey, we'll have issues just like Linden did growing, where we hit bottlenecks that we need to work to scale things up, but we've built a lot of those things in. So from the ground, we've tried to build a product that can get there. And we're trying to focus on the steps we need. So right now, we have focused on the commerce abilities that OpenSIM needs.
Far out into the future, there is this one currency. Isn't that is that really so great? I mean, there's then one entity that controls it. Is that not further down the rabbit hole of privatization?
I think that's a great question. I think two things. One, I think every country should still maintain their own country currency. If you look at what Europe did with the euro, I think the mistake they made was adopting the euro as the currency rather than a second currency that everyone was required to accept and being able to trade in each. Reason is you still have debts you need to manage that you manage by inflating or deflating your own currency, by creating inflation, and that should impact your exchange against us. That doesn't mean some small countries won't use our currency the same way that a number of countries use the US dollar or use the British pound because it's not worth it for them to manage their own. Okay, but for major countries, I think they should still operate their own. So I don't see us as the only people managing a currency. As far as the way we do it, early on, we need to figure out our formulas, things need to be done quickly. So basically that's going to be me, or if I hire some economists, someone to do what I did at Linden, someone looking at things, a team assessing things and making decisions on the fly. Long term, as we start to grow, what do I see? I think, I think we might have to put an international body in place that makes decisions that people trust. How's that appointed? I think it starts with us creating formulas, rules that we say, this is what we can publicize that doesn't give people the ability to game and drive the system, but that gives people confidence. And these are the rules we run by, except in extreme scenarios. You might still need some leeway for extremes. For instance, Linden dollar shuts down the Lindex if things move too far. I don't know if they ever had, but there are, and the stock exchange, NASDAQ, things like that have switches in place. God forbid things fly out of the hand. But we would have some policies, we'd have procedures, we would start to make that more public. We'd look to make it as automatic as possible. The benefit of having a digital currency is we have every transaction in our system. We can run huge big data analyses. When you run a real world currency, you don't know what probably 5% of the transactions are. Or if you know about them, they get reported a month or two in the past when a bank submits transactions. You're looking at a large picture and trying to guess. You have a lot more data with a digital currency. There's a lot more that you can automate. So our hope is that we would, yes, move to where there isn't some Greenspan type person who has way too much control over the financial sector, who is corruptible. It's a big thing in politics right now, corruption. Anytime you have one person controlling things, there's incentive for companies to pay that person an amount of money that makes it worth it for them to do something to the detriment of the general populace. And we look to avoid it. It's kind of impossible to say how we'd get there right now. But those are my thoughts. Rules that we follow, formulas that feed into an automated system, some decision making, and then ideally moving to a very public body who maybe makes very public decisions. If you can get to where it's not gameable and you can make it completely public, we print this many and these are the formulas we use and this is why, that's awesome. We can't be there anytime soon.
All the European countries that want to exit from the euro, they would, I think, embrace the globalists, because your pitch is that they can keep their own currency. I'm gonna call Angela Merkel and say, you all the people who are anti-euro, you can pitch to them. We're going to get the Deutschmark back and the Global on top.
She wants to fly me out. I'll come to Germany and I'll happily sit down. I'm awaiting the day that some real world country calls me up and asks me to come in and provide insight on, something economic, because it's like, hey, I ran a large currency. I've assessed, crazy things and looked at what causes them. Are you interested in that knowledge? Like, let's go.
And that was Christopher Colosi, head of Globit, globit.com. The Globits, I don't know if they glow in the dark. Fascinating stuff. Planet Money is next up on my podcast queue, so I really got to go. Thanks for listening. As always, head on over to 1920s Berlin 7th anniversary. Lots of stuff going on. Also, coming up on this show, James T. Reichert from Microsoft talking about virtual reality and augmented reality. We're going to link to a video that I've seen, Windows 10, this was a commercial for Windows 10, enabling a world of mixed reality, where they sort of show how how Windows 10 works with any type of goggle. So they're positioning themselves even outside of the pushing the HoloLens concept. Interesting stuff. Also coinciding with the Augmented World Expo, where Ebba Altberg was present, is happening right now in San Jose. I'm not there, obviously. I'm here taping this podcast. Augmented reality, AR, virtual reality, VR, is going to merge to MR, I hear, on the ground or through the grapevine. Next week, possibly, little teaser, virtual pornography. The porn industry has discovered VR. Wouldn't you know it? And we'll have a major player on playing a little bit of, as they used to call it, phone tag. I don't know if they call it Skype tag now. But scheduling an interview is imminent. And I don't know if it's happening next week or the week after. But stay tuned. And support the show. And comment. And let us know your conspiracy theories. And also call Alex Jones about the lizard people running Second Life. That's my last word. Have a fabulous weekend, and goodbye.
The Drax Files Radio Hour with Joe Yardley is a weekly production of Basic Drax Entertainment. The show is supported by Extraordinary Fine Magical Goods, Ionic, Maven Homes, Giza Creations, Botanical, Strawberry Sing, Humanoid Animations, Abranimations, Eros Avatars, Caravel Design, The Cube Republic, the Avazines Publication Family, What Next, Dutchy Furniture, Landscapes Unlimited, Bay Cities for Kids, Dwarfins, Fallen Gods Incorporated, Feroce SL, and Death Row Designs. Contact the show via Skype, DraxFiles, Avatar, DraxFiles, or email radio@draxfiles.com.